Until the early 1980s, most people pursuing the Great Australian Dream were looking for physical and financial security.
Australia's housing market is a huge topic of debate right now, captivating both local and international buyers. The evolution of house prices in Australia offers various economic, social and policy-driven factors. In this video, I'll look into the historical context of Australian house prices, examine key policy changes that have influenced their rise, and explore future projections based on data and research. Early beginnings. The journey of house prices in Australia dates back to the 19th century. In 1881, the median house price in current terms was approximately $870. This era was characterized by modern growth, influenced largely by the agrarian economy or the agricultural society, and the early stages of urban development. Post-war boom. The post-World War II period marked a significant turning point. The government implemented policies to address housing shortages, leading to a construction boom. This period saw a surge in home ownership as returning soldiers and their families sought stability and investment in real estate. Along with that, the government creating the war service loans where the interest rates were lower to help returning soldiers buy a home, as well as public housing schemes. House prices during this time were relatively affordable, supported by government incentives and favourable economic conditions. The 1980s. The 1980s introduced substantial economic reforms under the Hawke and Keating governments, including the deregulation of the financial sector. These reforms facilitated easier access to credit, fueling demand for housing. Coupled with a booming economy, house prices began to rise significantly. The introduction of capital gains tax in 1985 and the transition from a fixed to a floating exchange rate in 1983 further integrated Australia into the global economy, impacting property investments. Policy changes and their impact on house prices. The deregulation of the financial sector in the 1980s played a pivotal role in shaping house prices by allowing foreign banks to enter the market and deregulating interest rates. Credit became more accessible. This increased borrowing capacity for Australians, leading to higher demand for housing and subsequent price rises. The introduction of negative gearing. Negative gearing, a policy allowing investors to deduct losses on rental properties from their taxable income, has been a significant factor in the housing market. Reintroduced in 1987 after a brief suspension, this policy incentivized investment in real estate, driving up demand and house prices. Critics argue that it disproportionately benefits higher income earners and contributes to housing unaffordability. First Home Owners Green. Introduced in 2000, that
followed carefully.
aim to assist first-time buyers in purchasing homes.
Men with heavy equipment begin to level the ground and prepare it for building.
Using to make investments in gas, and we're in a situation now where our price in Australia,
Although Texaco is getting out of the beginning, the reason for the shutdown is
have had comparable effects over the years. The impact of global financial crisis. The GFC of 2008 had a profound impact on global economies, including Australia. However, Australia's housing market proved resilient, supported by strong regulatory frameworks and a mining boom. The government's stimulus packages and the Reserve Bank of Australia's reduction of interest rates helped stabilise the market. House prices, after a brief dip, continued their upward trajectory. Recent trends and data. The COVID-19 pandemic introduced unprecedented conditions. Initially, there were concerns about potential crash in house prices. However, the opposite occurred. Record low interest rates, government stimulus packages, and a shift towards remote work fueled demand for housing. In 2021, house prices in Australia surged by 23.7%. marking the highest annual growth since the ABS began tracking this data in 2003. Regional disparities. While the overall trend has been upward, regional disparities are notable. Major cities like Sydney and Melbourne have seen astronomical price rises, making them some of the least affordable cities globally. Conversely, regions like Perth and Darwin have experienced more moderate growth, influenced by local economic conditions such as the mining boom and bust cycles. Future projections. The future of house prices in Australia is closely tied to economic conditions like the bank's ability to lend, cyclical 20-year land patterns, and people's behaviour. The RBA's monetary policy will play a crucial role, along with government policies and incentives which usually don't help solve the issue, rather exacerbate it. Population growth and urbanisation. Australia's population growth, driven by immigration and natural increase, is a key factor supporting long-term housing demand. Urban areas, particularly in Sydney and Melbourne, will continue to attract more people due to job opportunities and amenities, sustaining demand for housing. Housing supply and government policies. So by addressing supply constraints will be important for stabilising house prices. Governments at both state and federal levels are focusing on policies to increase housing supply, such as zoning reforms, promoting high-density living, and incentives for new constructions. Effective implementation of these policies can help balance supply and demand, but will this make house prices more affordable? Investor sentiment and market dynamics. Investor activity will continue to influence the market. Policy changes affecting investment, such as adjustments to negative gearing or capital gains taxes, as well as putting in stronger land taxes so that those who hold onto land for speculation will think twice, and those who have large areas of land for mining, etc., pay their fair share, and it gets put back into government revenue to then go back into the community. This could impact investor sentiment and demand. Expert opinions and research. Research by CoreLogic and the ABS highlights the cyclical nature of the housing market. Over the past 30 years, house prices have grown at an average annual rate of 5.4%, despite various periods of decline. The resilience of the market suggests that while short-term fluctuations are inevitable, the long-term trend remains upward. Future scenarios. Unless there is stronger tax laws around capital gains, land taxes, and a government that wants to make public housing a priority for all of society, the upward trend will continue to rise, and will rise at unseen levels, as well as bigger booms and busts that will create a larger demographic of inequality. Thanks for watching, and I'll see you on the next time. Peace.